Before we start anything, I just want y'all to know I don't wear joggers no more. I know James still wearing Aeropostale, but I just got out of the shower. I just threw something on. But James, please put down the Aeropostale. It's 2020. So today in this video, I'm gonna go through this whole packet here just so I can break down exactly what I pay that's bundled into my monthly mortgage payments.
It's that top dog flow. Say he too meat to get a meal. Meanwhile, all y'all broke. Remember times was different. Ain't have a pot to pissin'. Now my stock done risen. Neck and wrist dripping like a lot of dishes. I told my family we gon' make it. Shay the only one that listen. Project Baby, all my role models in the penitentiary. You was blind to the streets. I had you wondering like Steven. Try covering your eyes. I never wanted you to see me. Pat came, I broke it down. It's too loud to keep it secret. See the envy in their eyes. It ain't hard for me to read them. Came up from poverty. My niggas doing robberies. Got hits like Apollo Creed. I know my mama proud of me. Big homie moving keys. The younger niggas selling weed. C12, we never freeze. The hood be hot like every season. See niggas dying young and Roddy Rich can't help them breathe. Dying to live, I ain't no average, I'm a different breed. Short nigga, heart bigger like I'm 7 feet. Yeah, I mean, I been ballin' like I'm overseas. Can't get an answer, God, I don't know.
So in this bundle of paperwork, it's a whole lot of stuff. But the key that we're gonna look at here is this initial amortization schedule. I don't even know if I said that word right, but it's basically where it breaks down like interest and principal payments over time because they do change. You got your payment date, payment amount, interest portion, principal portion, mortgage insurance. Then it's telling you the cumulative interest paid over time and your remaining balance on your mortgage. So we really finna dive into the depths of monthly mortgage costs versus rental costs. So like I said, this schedule breaks down pretty much everything that I'm paying. What's not on this schedule is stuff that goes to my escrow payment. An escrow is like basically this third party that's collecting money, and they disperse payments to your home insurance and like you have an HOA, a homeowner association that you pay a monthly fee to. They take care of the neighborhood, cut the grass, and basically just set out some rules like make sure you're not doing that crazy to your house. And then they make sure your property taxes get paid. So they take care of all that stuff. You don't really pay them like a service or nothing. They just kind of there, from what I understand. So those are the three things that's not in this schedule. So I pay the mortgage, which consists of interest, principal. Principal is where you paying off the house. Like that's literally your money. That's your equity that you're building into the home. So if I'm paying a mortgage and let's say my principal is $100 starting in the beginning, and then they work its way up to $200 because there's an inverse relationship between the interest that you pay and the principal that you pay. In the beginning, the interest payment is going to be super high, and then because the bank is going to get their money first, you're going to build your equity last. They don't really care about you. They getting their money first. So your interest payments start off at $200. They're going to finish off towards zero. Your principal start off lower. Let's say it start off towards like 50, and then it's going to build its way up like 150 over the 30-year or 15-year mortgage that you got. So that's what your interest portion going and your principal portion going. Your mortgage insurance is for broke people like me who I have an FHA loan, and essentially if you do not have a 20% down payment, which a lot of people don't, or a lot of people not willing to put into a house, that could easily be $50,000, $60,000, $70,000, $80,000 up front. So I do pay mortgage insurance. I hate it. But I wasn't about to just go throwing tens of thousands of dollars into this house off the jump. So mortgage insurance is protection to basically say if I fail, then basically the people who gave me the mortgage are covered. So that's that. And obviously property taxes you pay to the city. The value of your, there's a percentage that they take off the value of your home and you pay that to the city. Homeowners association, we already talked about that. Let's keep maintaining the neighborhood. And then homeowners insurance is obviously if something happens to your house, you cover by say Progressive, Allstate, Geico, State Farm, whoever you probably got your car insurance through, that's who you most likely got your home insurance through because they offer a discount. So those are all the things that I pay for. Some people don't pay for all of those things. Like, well, some people won't have a mortgage insurance. Some people will not be paying a homeowners association fee. Mine is extremely small, so it didn't really bother me too much. And the other thing is when you do have an FHA, that down payment that I talked about, you get a second loan and you pay that loan off over time. So a quick recap on everything that I said that I pay here on a monthly basis. I got my second loan because I did an FHA. I got my full mortgage, which includes the escrow payments, which take care of home insurance payment, HOA payment, and then property taxes. And then within my mortgage itself, I got my interest portion, principal portion, mortgage insurance. So all of that is what it costs for me to own this house. So if I get on Zillow and put my address in, first and foremost, my Zestimate, which is the estimate Zillow makes of your property value, is already almost $6,000 higher than what I purchased it for 8 months ago. So that's another thing too. In an ideal world, while you are paying off your mortgage, and like I said, you paying that principal, so you building up equity in your home, your house, in an ideal world, the value of your home is going up 3% every year. That's keeping up with inflation. That's beating out inflation by a little teeny bit, a few tenths of a point. So that's even more money that you are theoretically putting in your pocket. So you can't beat this. When you have an MCC, a mortgage credit certificate, they are giving you 20% of the interest you pay back in a tax credit. So if you have a $150,000 house and let's say your interest rate is 3.5%, you paying $5,250 in interest over the course of a year. 20% of that is gonna give you $1,050 back. So if you owe $700 when you went to go file taxes, they're gonna take $1,050 and give it back to you. So now you getting paid $350 when you go pay your taxes. You see what I'm saying? So that's another cost benefit of owning a home. I don't want to say you get paid to own a house. I'm not gonna take it there, but you do save money with this tax credit. So let's go back to Zillow. If I look at Zillow, the rent estimate for my house is about $200 more than my mortgage is. So already that's if I was charging somebody that rent, they paying me an extra $200. Now, if I get the second loan paid off and then I get 20% equity in this house, then I do not have to pay mortgage insurance anymore. So therefore that $200 difference goes way up.
The prophecy is true.
So in one of my previous videos, I talked about why it drives me insane to hear people say maintenance costs are the reason I do not own a home or the reason I will not own a home. Like I said in that video, if you can't sit down for 5 to 7 years and build up some good equity in your house, then it ain't for you. But you seriously are out here paying somebody I'm gonna call it a convenience fee. I got the receipts where I can show you I could walk out of this house, go live with my mama, and charge an extra $200-300 on top of whatever my mortgage is. Like I said, once I get 20% equity and I can get rid of that mortgage insurance and my second loan for the down payment loan, that's a lot of money. And when you rent in a place, you are paying somebody this convenience fee, which is hundreds of dollars. $200 a month times 12, that's $2,400 a year. 10 years, that's $24,000 you threw away. But for somebody else, a landlord, that's $24,000 they made in 10 years. You need to really sit down and think about if home ownership is for you, because you are literally throwing money away. I had rented out spots with Justin, my top dog, my top gunner. I rented out spots with him for a few years, and it just used to get me thinking. And I'm just like, dang, like, boy, we paying $1,600 for rent out here. Like, yeah, this joint nice, but sheesh, $1,600. And I used to start asking my mama, like, yo, what your mortgage cost? And I used to get some ballpark numbers, and I used to be like, your house better than this. We paying, got that on 50% more. I used to say, man, something ain't right. Something ain't right. And I mean, over time, you just kind of figure this stuff out, but whatever. That's me. There's some people out here that's really getting to it. But I appreciate y'all thugging through this video. Thank you for watching. Make sure you like this video, subscribe. If you got any questions about the home ownership process, and I guess I'll make another video on that, on the whole process that I went through buying this house. So I'll release that soon while we're on the topic of home ownership. But y'all stay safe, stay healthy, take care of yourselves, take care of your loved ones. Tell them you love them, kiss them on their forehead, kiss them on their cheek. They'll really like that. I'll see y'all later. Keep getting blitzed, because Lord knows I am. I'm out. I know that it's people with FHA paying a lot more in rent for a lot less. So I know the market of my house, I could get a lot more than only $200 a month extra in profit if I was charging somebody rent to live here. Buy a house. Stop renting stuff. Get a good location when you buy the house. Stay somewhere near military. Y'all like my rug though? Somebody told me my rug was ugly one time, and I absolutely did not appreciate that whatsoever. Not one bit.